All right, ladies and gentlemen, welcome to our first metaverse broadcast of this meeting. Thank you, Vlad, for setting up the Death Star looking thing that's over here. Please don't anyone pay attention to it. It is a 6-camera setup that's going to put us into the metaverse, and people can hyper experientially listen to my crypto jargon and all this stuff, right? Thank you guys for being here. Thank you, the rest of you, for being late. Thank you guys for being online. Really appreciate you. We got, Jaipur in the house. We got Thailand in the house. And everybody's wondering how to make money and how not to lose money in this market today, right? So that's what we're going to cover. If you don't know me, my name is Sim, also known as Simba Alabimba by some people. And I am doing my best not to lose all my money in crypto, right? So today, we're going to look at what happened, because what actually ended up happening is the strategy that we've been following hit some targets. Our trend-based stop losses hit the targets, so that there were some auto sales that happened. Welcome, welcome. And we're going to learn how that process played out and what was the reason for all of that happening in the first place. And then we're going to look at data on why it seems like it's time to sell, because everybody's wondering, how do I know how to know when it's time to sell? So we're going to go through data and look at kind of what made me think that it's time to sell. We're also going to look at 2 investment strategies. We're going to look at 2 ways that long-term investors invest in the markets that have been successful for a lot of people. One's going to be looking at how the hedge fund managers and the really big money invest. One's going to be kind of an updated version of that, where there's, in a market with this much volatility and times of this much volatility, there's a shift in how to invest. We're going to look at 3 profit-taking strategies of how you actually get your money out of the markets, which is like huge. And then there's going to be a gift at the end for everybody who is here and whoever's online. And we literally have shirts to give away today, so it's going to be a fun one. It's going to be a fun one. So, right? It's getting proper now. We're giving away stuff. You know when you make money in crypto, you just start handing out shirts at that point, right? Just a bit of housekeeping again. Please make sure if you have questions online, post them in the group or in the chat there. If you do have questions in the room, please just wait until the end, and we'll go through a Q&A period where shirts will be given away to the people who ask the best questions and potentially provide the best answers, which I think we got a high chance of winning because there's 2 shirts and we got a lot of people. So before we even go into all this stuff, a lot of times people ask, what's the perfect way of investing in crypto, right? And I can tell you this, there's no perfect way of investing in crypto. You're always going to fuck it up, right? You choose how you're going to fuck it up, but there's no secret to it. If there was a secret, everybody would follow it, and it's no longer a secret, right? So there's no perfect way. You will fuck it up. The market does a bunch of stuff that we never expect. So this whole process that's playing out now is things happening in the markets which we've never seen before. And that's why the strategies that a lot of people have followed in the past don't work in this environment. And we're going to go through that. So my kind of focus has always been, I'm not trying to get in at the very bottom of the market, and I'm not trying to get out at the very top of the market, right? That's a mindset that a lot of people have, that you think, I'm going to try to buy it for the cheapest price, and then I'm going to try to sell it for the highest price, which is like never going to happen. Otherwise, you would be a billionaire, right? Welcome. Welcome, Cyrus. So what I try to focus on is, how do I enter in a little bit above the bottom, let's say 20% up, and how do I exit 20% from the top, or capture that little middle part? And that's what we're going to take a look at, right? Then my focus is always not to lose your money, right? Because it's not about making the most amount of money. That's a mistake that gets made a lot of times. It's about focusing on not losing all of your money. And in crypto, that will take you to many, many places. And right now, there's this feeling in the air, right? It's like shiny object syndrome feeling, right? Everybody is sitting, if you're in crypto, you're holding something, and you're just constantly watching like 12-year-olds get rich around you, and you just feel like an idiot, right? Because you're watching shiny object syndrome. You're like, I should have been in that. And then there's people sitting outside of crypto, watching the kids in crypto apparently get rich, And you're getting the shiny object syndrome of like, I want to get in, right? And then there's hedge fund managers with billions of dollars of holdings watching nobody make money because they actually see who's making money, going, we're all idiots, right? So right now, this shiny object syndrome feeling, if you're feeling it, just know that it's the right feeling to have right now, but it's not the right feeling to act from, right? So that's really important. Now, in this journey of like, how do I understand what's happening in the markets, I stopped listening to YouTube in many different ways. I'll be honest about that. Because it's people younger than me telling me how to invest. And I'm a baby, so like, how am I going to tell like a newborn toddler to tell me how to invest, right? Instead, I signed up for Real Vision, which everybody should sign up for. It's free to sign up for it. And that's where some of the top minds in finance taught, right? And they talk a different language. They talk a completely different language. The only YouTubers, I'll be honest, that I listen to are Crypto Crew University, because he was right in the past, and Gareth Soloway, because he was right. Both of them have actually given me the data and knowledge and have a track record of being proven right. Raoul Paul was right in many different ways, and he has Real Vision. But I want to show you something from Real Vision. Okay, so this is a psychologist that works with multi-billion-dollar hedge fund clients, and this is her reflection of what they're feeling. So if you're feeling this, remember it's normal.
Opposite of what people wanted to do. Like I have long-term clients who know this is what we're doing and will still say to me, like, okay, just how do I get over this fear? You don't. You just like admit it for what it's worth. It loses a lot of its punch when you do that. You go, okay, I could get fired. Yeah, actually I could. Okay, like, okay, what do we have to do to avoid that? And then like step through that. Sometimes that takes the form of trading shorter term, particularly in this market. I agree with Stephen, like nobody's been making any money. I have two clients who both run their own fund, and they both said to me last week for different reasons, no one's making any money. Like, so it is, the professionals have definitely struggled this year. But understanding that prediction and then working.
This audio is giving us trouble in the first place, but the basic gist of it is like, she's talking to the hedge fund clients, and the biggest money players in the markets are looking at each other and going, look, nobody's making any money in this market. They're getting the same syndrome as everybody else, right? And nobody's making money in this market because it doesn't make sense anymore. There's nothing about this market that's normal, especially the crypto markets. They were already bananas. Now they're getting bananas. It doesn't even make sense to the crypto heads anymore, right? So if you're getting that feeling of like, I'm not making any money, welcome to the club, right? Welcome to the finance club. Nobody's making money in these markets. It's so confusing, okay? So the reason is because the whole game has changed in a very big way, right? We have BlackRock and the big money that has entered the crypto space. The place that was supposed to be this freedom space is now we have BlackRock playing with the space. So they're going to control everything, and they're going to make things happen which we would never expect, right? We also have, in this time around, we've had things like the all-time high happening before the halving, right? That doesn't make any sense. If something is supposed to get rare after the halving happens, and the halving is when half of the Bitcoin starts to get produced every day, which is like 900 Bitcoin get produced every day today. After April 19th, 450 Bitcoin will be mined every day, right? So when it gets rare, it's supposed to get more expensive. Right now, it just became insanely more expensive before all of that happening. Could that be the market front running that whole process? Yes, but it's not supposed to happen like it's happening now, right? At the same time, we've just had this rocket ship up with like no pullbacks, nothing significant as an opportunity to buy, which is not how markets work, not normal. We have complete divergence from the business cycle. So this is one of the first things that I look at, that something is wrong, right? Because actually, these blue lines, you guys can't see it. Let me share it to you. These blue lines are the halvings, right? This green and red line is our beloved Bitcoin in logarithmic curve mode. And this orange line is something called the ISM, which is the business cycle, which is one of the metrics that these hedge funds and large players use to be able to see which way the world is going, the financial world is going, which way the economy is going. Bitcoin has tracked almost perfectly with that business cycle, right? Every time. We think it's the halving, but it's actually not. Halving has a part to play with it, but the vast majority of the growth that happens in Bitcoin happens because the business cycle goes down, everybody gets fearful, and the governments print money, so the business cycle goes up. Bitcoin goes up alongside that. When the business cycle starts to top, then, basically it's cyclical in almost perfect synchronization, except for 2 times. The last time it happened was right before COVID, right? Business cycle was going down, and we had Bitcoin go on its own run. And it went from $3,500 to $14,000. And we were watching it going, something's wrong, something's off. We weren't so hip to this idea at that time, but you could see that something's off. It's just pumping in the middle of a dumping cycle. And so what most people did is people got excited, people ran in. By the time it went to 14K, everybody was singing the same praise. Bitcoin's back, good times are here, let's buy it now. And the next thing it did is it just went sideways and caused everybody pain for months and months and months. And then COVID happens out of the blue, right? Now the COVID happening dumped the business cycle back down again, reset everything. Guess what happened? It printed money, and that took Bitcoin on another run. Logical, okay? But this time around, this has happened. I'm looking at that, and I'm like, something's wrong. Like, if you remember, whoever was here last time, that's this second bump that happened here, right? Something was wrong. And we just started saying something's wrong, something's off. All the metrics are off. So we're like, get out of 58K because something's completely wrong. This is not how markets are supposed to behave. All the metrics are saying get out. So we got out of 58K. It went to 65, same year an idiot. 69, same year a moron. Crashed to 30, same year a genius. It's like, no, I simply just look at stuff and I'm like, this doesn't make sense as far as I'm concerned, right? So I get out when things don't make sense. So at this point, you can see that. You can see that the business cycle has bottomed out. Bitcoin went on its own run. Bitcoin front running it can happen. It could be that Bitcoin just, if people believe in it, so they're front running the business cycle. But for it to make all-time highs, for all the mania to return, for the psychology to be where it is, and we're going to go through a bunch of stuff, all of that is off. It's the wrong timing for it, right? So now we're back at levels where there's a ton of profit in the markets, right? So then my mindset is, okay, I just don't want to lose my money. There's profit sitting in some things. We had a bunch of cash sitting on the side waiting for pullbacks to try to invest the way the big investors do. None of us had a chance to go buy some stuff. It just left, the train left. But now there's a bunch of profits in the markets. So that's why today I'm like, let's just take the profits, right? And we're going to go through the strategies of taking the profits, of how to systematize this process. But this is not normal. Now this blue line is the halving that's coming. I'm pretty sure people are about to get a rude awakening at the halving because everybody thinks that the halving is when you get rich, and that's usually when you go broke, right? Okay, that's one thing that's not right. Now at the same time, the psychology of the market is at places which, to me, is deja vu now. I've been here so many times before that this is the cycle that we always follow, the Wall Street cheat sheet. Guess what we had now? We had, a pump, some sideways consolidation, TV's freaking out, going nuts, right? And, okay, wait, sorry, I gotta remember to share things on this thing because this is why, Vlad, you should be controlling all this stuff. You know how useless I am at all this crap. You can, it's just now it's in front of me and like we kind of messed it up because Sim set it up, right? I just talk. So this is what happens, right? The market went up, went sideways for a bit, got everybody to believe. Then it just pumps all of a sudden, makes a peak, an all-time high. We all think we're euphoric. We're all about to get rich. Newbies come in and start to wonder how they can buy it at these special prices. Things crash, then they come back up and they stabilize, and we go into a complacency phase, right? That's literally what's happened now. Things went up, consolidated sideways, convinced everybody, ETF, we're all going to get rich. And then it pumps, goes and makes all-time high, pulls back. Now it's going to hang out here for a bit, telling us, people are not going to be sure which way it goes. But at that point, smart money's offloading. And then we go through the rest of the cycle. At least that's what I believe, right? In that cycle, you can see from the fear and greed index that we haven't been this high except for just the peaks, right? In the 2020 peak, this was the 2018 peak. The fear and greed index has only been this high 3 times in the last, or 2 times other than this time, in the last 6 years, which means we haven't had this much greed in the markets except for the tops. So now the business cycle, something's off. Fear and greed, well, full-on greed. Okay, great. Now, remember what we looked at last time? This I love. It's like this is my sports, right? This is my sports. This is the ETH Nupal chart, right? This, ladies and gentlemen, is the ETH Nupal chart, NUPL, net unrealized profit and loss chart. What it actually is it's just the emotions of the market, the same emotions that we have listed in the Wall Street cheat sheet, but drawn out in colors, listed because of the amount of profit that's in the markets. That's what determines our emotions, right? Now, here, I just want to reiterate something. If you're an OG, you've heard this 1,000 times, but this entire market is emotions. The emotions are right here and right here, right? The only thing that controls the emotions is a number on a screen. Number on screen go up, happy. I love my wife. I love my kids. I love my life. I feel rich. I walk like this, right? Number on screen go down, fighting with my girlfriend. No. I'm just not happy with life, right? Angry, fearful, anxiety. You make me rich, I go into belief. Then we go into euphoria and greed and joy. It's literally tied to a number on a screen. So the trick that our people we've always talked about is like, just don't look at the number, right? Because there's gonna be 2 numbers on your screen in this game. There's gonna be a number that has this weird like S with a line through it, or an E with some lines through it, a euro sign or a dollar sign or IDR next to it or something, right? There's gonna be that number. And then right below it is gonna be the number of how many actual assets you own, right? What the mistake most people make is you just watch that top number. When it goes up, your emotions change. When it goes down, your emotions change. That means somebody has a remote control of your emotions, which means they have a remote control of your actions, because emotions create your thoughts, which create your actions, which creates your experience, which creates your emotions, right? So then the trick is, I just look at the number below, right? I'm like, first of all, as long as I didn't buy garbage, as long as I have solid stuff, then I don't go, this is how many dollars I have. I don't have them, right? They're not in my pocket. There's just it's a black mirror that shows my numbers, right? Right below that, it says, you have this many Bitcoin. You have this many Ethereum. So then I go, I have this many bars of gold. I have this many bars of silver, right? And that number doesn't change unless I change it, right? Or like during the bear market, you know what the smartest people did? They just logged out of the apps and just stopped looking at it, because you know how many bars of gold you have. They're going to stay the same amount of bars of gold, right? But if you can get hip to this trick, that number on a screen controls your emotions. And this is an emotional chart of exactly how you're feeling, depending on who you are, according to number on the screen. This chart shows what long-term holders are doing, right? Which means anybody holding longer than 155 days, long-term holders, people who have belief, how are they feeling? How they felt in this whole process was they started to go into a state of optimism back when the prices of Ethereum were like $2,000, right? Which was like a little while back, but it feels like years ago in the world of crypto. They then, as they became more profitable, they went into a state of belief when prices went to $3,000, right? They went all the way up to $4,000 with a state of belief, but when long-term holders believe things, they have unlimited faith. It could go down and they still believe it, right? The short-term holders tell a completely different story. And these are your average people, normal people who don't know what's going on, and they're not going to hold for long enough. They don't have the faith because they don't know what gold is and what's not. They literally just went and like a pixel, just like a pixel of belief. The moment they started believing, hey, The moment they even went into a second of faith and belief that they were going to get rich, that's exactly when the market tops. And this is uncanny. This plays out constantly. The moment the average person starts to believe that they're going to get rich, that's exactly when they don't make money, right? And the long-term holders took profits. And that's why I took some profits on it. One of the reasons, right? So then you have to decide how you're going to play this game. My strategy is I am not trying to get in at the very bottom. I'm not trying to get out at the very top. I'm trying to make the money in the middle. I'm happy to ride it from here to here and get out and let somebody else handle try to call the tops and try to call the bottoms. I'm also just doing the opposite of what everyone else thinks. The moment everybody starts to get excited about buying crypto, I get out, right? Everybody hates XRP right now. You know what I did? I bought more. And in like a few months, we'll have this conversation and you'll be like, you are a genius. It's like, no, I'm just crazy enough to do stuff that other people are not doing and they're not feeling, right? So looking at it this way, you can see that the moment the short-term holders started to believe it, it's time to get out. So now just to recap, the business cycle hasn't fully turned and crypto went off on a run. That's one red flag. The psychology is exactly where it needs to be to trick everybody into believing they're going to get rich, which nobody's making money, as we just heard, right? The fear and greed is peaked out towards greed. That's a red flag. The short-term holders came out of their anxiety state and thought they were going to make money. That's a huge red flag. The long-term holders went into profit, so they're already taking the profit. That's a green flag from their side, but a red flag for most people. Then you have to think like, why is that happening? Like, what's changed now compared to what was before, right? If you think about the world, right? The world we come from was a very stable world. Year to year, things were pretty stable. Countries were stable, currencies were stable, jobs were stable. You know, the way we can understand the world was stable until about 2015-ish. You notice like around like 2015, things started to change and like technology started to change things quickly and just it was getting harder to understand the world. And then something happened in 2020. I don't know if you heard, right? If you haven't, Google it. Actually, you can't Google it. It's like disappeared off of Google. It's not allowed to be on there. Something happened in 2020 and just all of a sudden the world just went bananas. It went from everything's open to everything is closed. From freedom to like tyranny. From da-da-da to da-da-da, right? People went from rich to poor, and then they went from broke to billionaires, and then from billionaires to broke. That's called the ride of crypto, right? That is a signal that the world is becoming more volatile. Society is becoming more volatile. Today, we just, you know, we're changing how things work every 6 months. Like being in the AI space, it's insane. Because if you would have 2 years ago, you would have told me I would have every expert in the world, a lawyer, an accountant, a consultant, a government, every single thing I need would be almost free for me to access. I would have left you out of the room too, right? But today we have that. The world is changing at such a rapid pace that volatility is doing this. That is one of the reasons why crypto is doing this. It's one of the most volatile representations of volatility in the real world. So if with that frame of mind, it makes sense that it just out of nowhere went like this. What do you think is going to happen next? Right? Are the chances of it just going like that? No, eventually it's going to snap the other way, right? Volatility goes like this, right? It's like a heartbeat. So then logically, once the times are good and there's profit sitting in the markets, you know, harvest. Take while the taking is good. Don't get greedy on that side. But what is it that made it go up? Because if printing money makes it go up, what made it go up? Money. I'm so smart. Money made the market go up. Thank you for joining. Next time, we will tell you how air lets you breathe. And the right after time, we're going to blow your minds with food feeds you. The money, see, the whole point of a market is to predict what's going to happen, right? As soon as we became hip to the fact that money printing is what causes the markets to go up, The money printers knew that. They were like, this time around, these guys are smart. They're just going to watch us print money, and then they're going to enter the markets. So what they did is they printed a bunch of money, and they put it away. They like hid it, right? This thing is called the reverse repo facility, where banks park $2.4 trillion. And they've been draining that into the markets. This is going to be, a lot of this stuff I say is going to be repetitive until you understand. And then I still keep repeating it. It's the reverse repo facility, where banks parked $2.4 trillion. And right when it started going up, markets started dumping. Right when it topped, markets bottomed. Right, and now it's been coming down, and that money's been bleeding out into the markets, and that's pumped all markets. That's one. But now it's back down to historical levels. So it's basically drained out, right? At the same time, when the banks had issues, they created this thing, the BTFP, the Bank Term Funding Program, which was another way to print money. They printed billions of dollars and gave it to the banks. That ran out March 11th. So now we got two places where money was coming from that have run out. But now here's the difference between what the average person knows and what money gets you. These are the reports that I get inside of the Real Vision Discord, okay? It's $7,000 to buy, but this is a live report, well, live enough, weekly report, of exactly what each central bank is doing and how much liquidity they're printing and which way the total liquidity of the world is going, right? So US, growth has stalled. The reverse repo facility has drained out. People's Bank of China, liquidity is expanding at a much slower rate. Right. So that means, so with liquidity, it's not always just if it's coming in and out, it's also the rate of growth that causes markets to expand. So China, slowing down money printing. Europe, ticked higher. It's in positive territory, largely due to base effect, which means that when the US dollar changes in value, the amount of money that gets printed in Europe looks like it's changing because of the currency fluctuations. Japan, liquidity is flat. England, liquidity is shrinking. Okay, so all the important central banks are either flat or down with a little uptick in Europe. Okay, so generally on a downward trajectory. The sponges where the money was sitting, the two main ones, have drained. One's completely stopped, one's drained. No more money coming from there. But wait, Sim, isn't the ETF, aren't we all going to get rich from the ETFs, right? No, this is ETF flows. They were positive, 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 positive until we just went negative on 18th of March. $154 billion. Was this million? Yeah, $1 million. We just went negative. So now that liquidity pump is not working either. So then you can start to build a picture, like business cycle needs all of these things. At the same time, the NASDAQ has peaked, the S&P has peaked. They've all been kind of pushed into this narrow space. All of these are signals that it's time to GTFO. Right? That's my analysis. That, like, even last time, my message was, you want to go to the moon? Where's the fuel in the rocket? Right? We're running out of fuel, Captain. And they're like, no, we're going to 100K. And it's like, on whose money exactly are you planning on getting rich, right? So the money printer is not going burr anymore. Okay. So now we're starting to build a mental model and a picture of how to look at this. That's why I always say, I want you to imagine that money is an ocean, right? It's called liquidity for a reason. Imagine all the assets in the world and all the money in the world as an ocean. And if you really have to imagine, it would be like bonds are an ocean, stocks are a local sea attached to that ocean. Crypto is like a little pond that's on the beach, that's like right next to the ocean. And that's how much liquidity and money is sitting in each one of these. When they print money with these things, it's going into either the Forex markets, basically the currency markets, which are debt markets, right? Currency is debt. So they dump a bunch of water into the ocean. That then causes the sea to rise, which is stocks. That then causes your local beach waves to go up, which is your NASDAQ. That then pushes water into crypto, right? And then crypto goes up. As the puddle goes up, your little glass of water called Bitcoin goes up. Everybody's watching the glass of water, and they're like, glass is going up, right? And then we're over here holding like molecules of like micro-cap coins, and we're like, my molecule is gonna go up. Yeah, it is, but dude, the ocean's going down though, right? Like, what do you think is about to happen to our little glass? So that's how we kind of make judgments. And now, this is where, let's just look at multiple ways of investing, right? You're hearing this and you're going, I think I'm gonna go home and sell everything. That is exactly how you will probably lose all of your money. By just listening to a random Indian without shoes on and going home and going, I'm gonna make all my decisions in life because this guy convincingly told me so, right? Absolutely not. The reason to help you understand all of this stuff is you need to have your own frame of mind and your own visualization of how the world works, and then you decide what you want to do. Because think about it, right? When you see the waves in the ocean happen, like if you're walking on the beach and you're about to enter the ocean and you see a wave come, what do? You're like, okay, I'm just gonna give it like a second, crash, and then I'm gonna go into the ocean, right? If I'm floating on the ocean, I'm planning on staying there for the next whatever, and there's waves happening, do I care? No, I'm just riding the waves up and down, right? Right? Or like, you ever like walk out of the ocean and you see the wave and you're like, oh fuck, and then you just like, you run because you don't want to get hit, right? Who are you? You got to decide, are you somebody who's leaving the ocean now, which means you're gonna, you need to sell your stuff in a shorter time period, in which case you should move. The wave's about to crash. You're about to get hit. Are you somebody who's walking in which case the wave's about to hit? Give it a second, right? Enter. It'll be really nice entering when the water's pulling you in, right? Are you somebody who has a yacht? In which case, doesn't even matter, does it? You're not even close to the beach. You don't even see the waves. So then you have to decide. So then let's look at two different ways of looking at it, right? The biggest money players who you don't hear, they're not on YouTube. They're not 20-year-olds. They're like 50, 60-year-olds, right? Who have all the money in the world. You know what they're doing? They're just sitting, hanging out. And they have a ton of cash. They've been sitting on so much cash. As a matter of fact, you know what Bezos is doing? Getting cash. You know what Zuckerberg's doing? Getting cash. Ralph Lauren? Getting cash. Name a name. Dell. Mr. Dell. Apparently there's a Mr. Dell. I didn't even know there was a Mr. Dell. Mr. Dell, getting cash. Walmart family, getting cash. Like the real OGs of the world. You know what they're doing right now? They're getting cash, which means they're selling their assets and they're bolstering their cash positions, right? All they're doing is they're just waiting for the wave to crash and everybody to get hurt, and they're going to come in and buy stuff up, right? That's the long-term way of thinking, because they're generational thinkers. They have a 10-year longer time horizon. So if you're somebody who has the wherewithal to wait 3 years in this space, which 3 years is like decades. I remember 3 years ago when I was like 12. It's crazy. I'm actually like 13 years old. I just aged this much being in crypto, right? But if you have 3 years, it does not matter when you get it. Crypto will be higher than where it is today. Bitcoin will be somewhat higher. I think Bitcoin's a bit of a trick. This is my thesis the whole time, that Bitcoin has, stabilized as an asset, so it's going to range sideways like it's doing now, and it's going to trick people into thinking they're going to make money, and people aren't going to make very much money. Very much. They're only going to like 5x their money if they get in at one point and get out. Like, it's not much in crypto, right? The rest of the assets, I think, will be much higher. Many of them, the good ones, will be much, much higher than where they are today. So if you have a 3-year time horizon, let's say even a 2-year time horizon, sure, you could take a wave and you could still get to the other side. But if you're somebody who's like, look, I got in, a bunch of my people, they got in. We've been sitting there for like a year waiting. Like, it's like surfers. Wow, you know how it is, right? You're like sitting on the ocean and just sitting, and you've been waiting the whole day. And then the wave comes, right? And you're like, I'm hitting this wave. Right? And
the longer you wait, the bigger wave.
Right. And in this case, okay, the wave here. And we're right at the edge. I'm riding that thing to the beach. Right? I've been waiting for a long time. I gotta eat. Right? I gotta go to the warung and stuff. So if you're somebody who's like that, then think about what your strategy is. Short term, maybe you need to get out of the water because, you know, the ocean is getting crazy now. Ocean used to be like a calm little ocean and the waves would look like this and then we could just ride them. Now it's tsunamis, right? You've seen what happened. This is a huge wave. Nobody expected this wave. This is one of those like, you know, gotta get a jet ski, right? And so now if you're sitting on profits, think about that. That's all I'm saying. But then have a plan, have a strategy, know exactly why you're doing it. Now, a way that you could access this data in some capacity for free is this. It is the liquidity, what's the name of this one? I will have to text you because I forgot. Oh yeah, MF Global M2 by Meeg Finance. Okay. Where did we go here? Okay, this is MF Global M2 by Meeg Finance. Okay, it's an indicator, this blue line at the bottom. Somebody made it. Whoever it is doing good for the earth. It's one of the best representations of the global ocean that we can look at. Global money supply that we can look at. So as you see, right, this is the ocean, this is the puddle. Puddle went down first, right? You know how like a wave goes in and then the puddle pulls out first, and then the sea pulls out and then the ocean goes down, right? Puddle went down first, crypto and Bitcoin went down first, then the liquidity started to go down in a significant way. Both of them bottomed out. Ocean comes up first, crypto goes up a little bit later, ocean pulls back, crypto pulls back, but then something happened here. Ocean is kind of just hanging out, and the puddle just went on a run. So that tells me that somebody's trying to trick me into thinking that I'm about to get rich. I'm about to, you know, have a bath in the puddle. I hope I don't lose people with all these analogies and stuff, but that's literally how I think about it. I'm like a little kid, and I'm like, why puddle go up? Ocean no go up, right? But if you look at it, if you zoom in a little bit, you can really start to see things. And this was very interesting. It was like, it went up, right? It went up last time, crypto went up. Then it went sideways for a minute. Then it went sideways for a minute. Crypto started to go up. Okay, interesting. Then you see this nice little bump, and you see crypto go off on a run on its own. And then it flattens out here, and 4 days later, Bitcoin makes the turn. It dumps, and a few days later, crypto dumps, and Bitcoin dumps. And it's going lower. So I'm like, it doesn't make any sense. We have a divergence between the global liquidity, we have a divergence between the business cycle, and we have a divergence between just everything, right? It doesn't make sense. Does that make sense? Right? It makes sense that it doesn't make sense, right? Okay, good. Perfect. Woo. Thank you. So now, in the middle of that, I forgot what I was talking about. There's a dynamic of money that we are kind of misunderstanding in the market, especially YouTube, right? They say like, Fed fund rates are up, interest rates are high, therefore money is harder to borrow, therefore risk assets should go down. That's one of the mindsets that people have had, right? And they go, when the Federal Reserve drops rates and it goes to zero, money will be easier to borrow, therefore risky assets will go up. Like logically thinking, that makes perfect sense. And that is what plays out, because this whole cycle of up, down is happening because 2008, we all went broke. The world went broke. So then they printed a bunch of money and dumped it into the system. But when they print money, it's just debt that you take out, and you say 4 years later, I'll pay off this debt. 3 to 5 years later, I'll pay off the debt, but 4 years later, I'll pay off this debt. 2008. By 2012, that debt needs to be repaid again. So guess what? The European financial crisis happens. And so rates go to zero, they print a bunch of money. Rates being zero means I can borrow an unlimited amount of money, right? If I tell you you can borrow for 0%, you're gonna be like, fantastic, let me borrow all the money in the world. 2012, money printing happens because rates are zero. You can get money for free. They print more money and go, we'll pay you off in 4 years. 2016, we'll pay you off in 4 years. 2020, we had to shut down the entire world. We got to print a lot of money on this one, but we'll pay you in 4 years. We'll be right back, right? This time around, rates are going to need to go to zero. There's literally no way. I mean, there is a way. They could just keep rates high and they could just blow up the whole world. They're not going to do that. So this time around, rates need to go to zero. So governments, institutions, everybody can borrow money for free again so that they can continue this game going forward. That's what printing money is. That is all true. That like when you can borrow money for free, you can get money for free. Therefore, that money flows into assets and things pump. But when you look at the data, it gets a little funky, right? First of all, it's not a coinkydink that Bitcoin was invented in 2008. It hasn't gone through any major crisis ever in its lifetime. It's just gone in the whole cycle of printing money, right? The only time it's actually seen this same rate environment was back here in 2018, 2019, when the rates were high. Of course, rates are high, crypto dumps, and then it just goes off on a run by itself, like we were talking about, right? It just goes from like $3,000 to $14,000. Nobody knows why. Rates are high. Money should not be cheap. Still, it's pumping. But actually, when you look at it, when the rates go flat, that's when the assets have their final run. And when the Fed starts dumping rates or reducing rates, everything is dumping in our world, right? Even if they like change numbers, it's just a dump, right? When the Fed funds rate goes flat, that's when assets have their pump, right? Then crypto peaked early. I think crypto's peaking early. I think when they start to drop rates, we're going to see something crazy happen. And volatility has increased even more than COVID now, which means there's something crazy coming in the world. All of this lines up because in order for them to have an excuse to reduce the rates, something needs to happen in the financial world for them to say, hey, we got to reduce the rates. This cough came out, right? Last time it was a cough. This time around, it's going to be a digital cough. Okay? But when that happens, you see what crypto did. It went from 14,000, bounced around sideways, and then we ended up bottoming at 3,500, and everybody thought the world was going to end, right? Then that was the excuse to print money for free, and then crypto went on its own run, right? So I think that same cycle needs to play out, especially now that the puddle just went off on its own. It's going to correct. The rate cuts are going to end at some point. I think sometime in this year we see. I'm betting my money on AI cyber attacks, mutating AI cyber attacks. And you're like, that's pretty specific, Sim. Yeah, they literally tell you what they're going to do. By they, I mean like the WEF said, there shall be a COVID of the internet. And everybody's like, nah, I'm sure he's kidding. And then a year ago, they were like, 2024 is going to be the year of cyber attacks. And like, they literally opened the doors. You can go attend these meetings. We're online. It's called Cyber Polygon. They have it again and again. Nobody cares. Nobody even looks. Cyber Polygon. Cyber Polygon, yeah. That's one of the meetings that they did, right? Or listen to the WEF meetings. Like, people are watching TikTok dancers. I'm sitting there watching the WEF meetings and like learning what they're going to do. And they tell you that there's going to be 2024 is the year of cyber attacks. And there's mutating AI cyber attacks that are going to be the next COVID, which is going to be much, much worse than the COVID of the this world. Now, to me, I'm like, it's so hard to pry Bitcoin from our cold, dead hands now. Like, you pretty much have to kill Bitcoiners to actually take, and even if you kill them, it just stays in the wallet. You can't take it, right? So like, remember the last time everybody sold? It was when it was the Bitcoin fork wars, right? It was like Bitcoin is going to turn into Bitcoin SV and Bitcoin, and so like there was confusion. And nobody knew, and that was like one point people got scared and sold some Bitcoin because they're like, I don't know what's going on. Doesn't make sense. This time around, it's so hard to get people to sell their crypto, Bitcoin specifically. I think this is going to be a modality of taking it from people. Now, as far as I'm concerned, all of that's good to me because I'm sitting on cash, right? Good. Let it crash. Good. Let the rates go down. Good. Release the COVID of the internet so we can buy more, right? So when and if that happens, do be the person with cash. Do be the person who's taking profits now. Do ideally be the person who's on the other side of that trade. But this Fed funds rate thing is, when it plays out, the rates are going to dump and markets are going to dump and everything's going to get scary. That's the moment to buy. At the same time, like this one, I'll pull it up again because I think it's called the insider trading chart. Insider stock trading barchart.com. It literally tells you what the smartest people not the smartest actually. There's a lot of rich people who are really dumb. You know what's one of the biggest realizations that hurts sometimes? It's like there's people way dumber than you making way more money than you. Like, seriously. But anyways, I digress. So like this is literally insider selling. This is C-suite executives, CEOs, everybody who knows what's going on in the game. This is what they've been doing since the beginning of the year. They're just offloading onto the plebs, us, right? And they're bolstering the cash positions. So they're getting ready for this process because they know how the game works. And actually, here's for the recording. This is what we're looking at, barcharts.com, insider trading activity. You can go down and look at, okay, Meta did a bunch, Salesforce did a bunch, highest number of trades, Dell, Meta, Dell, the who's who. You can just go down this list and see everybody selling their stuff. These are greater than $1 million, yeah. Like, you know what Zuckerberg is doing? He sold $190 million of stock and is building a 5,000 square foot bunker in Hawaii, and he's feeding his cows beer. Cows beer.
Yeah.
Beer, yeah. While the plan is for us to eat bugs, his cows drink beer. Which, to be honest, I was like, I wonder what that beef tastes like. It must be marble. No, the point is, do as they do. Okay, so now that is the framework of thought that leads to this point. So then, what do you do? Literally, what do you do? Or, what do I do? First of all, I kept some cash on the side the whole time because I was like, I don't like to just go in all at once. I've learned that mistake. That there were some positions that we held. Okay, and you hold some cash on the side and you wait for the pullback. And the reason we wait for the pullback is because when the market moves, you see what moves, right? Nobody knows what's good until the market proves to you that it's good. And there's 1,000 narratives playing out. So things moving will tell you, hey, the money's flowing there. And then when it pulls back, you go, I'm getting into this shit, right? So that means I never catch the bottom because at the bottom, nothing is moving, right? I just put a little bit in and then you wait on the side and you go, that's moving. Great, I'm gonna get into that, right? That opportunity didn't happen. So you do keep some cash on the side because you want to be able to buy the things that are cheap, right? Now, that's where I'll admit it. I'm an XRP head, okay? When something is that cheap, when something is that suppressed, and I'm that close to the people who are building it and all this stuff, I'm always happy to buy it because I was there the last time it did what it did, and it just completely melts faces when it moves. But that's because I have an edge in an understanding around what it is, right? You will probably lose all of your money if you buy it. Almost certainly. You'll just get so much pain that, like, it's funny, it's called Ripple, right? So we make the joke where, like, this is like having, like, Ripple clamps on, right? And it just, like, hurts and hurts and it keeps getting tighter. And then most people just give up. And then when you give up, when you, like, like, nipple clamps hurt when you take them off, not when you put them on, right? Anyways, I'm sorry, ladies. This is a conversation in financial circles. I'm just saying, this is not from personal experience or anything. This is just holding Ripple. This is how it feels. I bet that's how it feels, right? And this is not even going to be edited for YouTube. You're welcome, YouTube. Okay, so cash on the side, right? And so so there's two ways of looking at it. The big money strategy is cash, pull back, buy. Goes up, pull back, buy. It isn't. They're not about taking profits, along the way, because to them, moving billions of dollars back and forth moves the markets accordingly, right? They're about what we're going to look at. Welcome. They're about what we're going to look at, which is just riding one full cycle through. and then maybe take profits at the end, but they ride out the volatility, right? Which means pull back, buy more, pull back, buy more, pull back, buy more. And then now they're all top. Guess what they do? They just take a bunch of cash off the table and wait for the big crash, and then they buy them, right? But you got to have cash on the side to do that. Now, what they're watching is this. This is their time horizon. And they can afford global macro investor, which is $80,000. This and MI2 partners together is $80,000 to buy. That's why the average person doesn't even know this is going on. This is a representation of how much, because it's, okay, we said the central banks print money because they need to pay off their debts every 4 years, which means they borrowed it in 2020, which means I can calculate how much debt they owe in this next cycle, right? This blue line is how much debt they owe. Verified going forward. There's just the Fed. There's more central banks that have borrowed all this money. There's private debt. There's so much debt, it's insane. But this is what they're going to have to do. They're going to have to pay off somehow, and they don't have any money except for all our money that we give them. This white line is how much money they print. This was the banking crisis that happened. So then what do you think is going to happen going forward? If just this bump from here to here was the 2020 market, which the 2020 market wasn't a normal market, was it? It just kind of went up and then it curved over and then it just, that's not how we're used to having markets in crypto. We're used to the blow off tops where money just sloshes around like crazy. It was because of this. COVID happens. They don't have enough money. This line goes down here. They printed enough money to follow perfectly with how many debts they have. Came here. Banks had a bunch of debts to pay to us. Printed a bunch of money to give it to the banks. Comes down. It's probably going to go down. It doesn't just always perfectly align. But the big money doesn't care because they're not interested in what's happening here, here, here. They're like, I get in here and I get out here, right? And not here. I'm not trying to get in here. Get out, get in here, and get out here, right? Which means by 2026, I'll be out. And I always hit the eject button early. Like last time was 58K. You guys go to 69. We're happy with making money and having it in the bank account, right? But this actually means that they're going to have to print the entire world's money supply again. And I literally had to confirm this with so many experts. I was like, does this chart mean that like if their balance sheet has to go from 8 trillion to 16 trillion, does that mean they have to print the entire world's money supply to double their balance sheet? And they're like close to that much, which means when you print the entire world's money supply, guess what happens to the world? Insane volatility, currencies crashing, countries collapsing, maybe a COVID of the internet, right? So all the things are lining up. Now, a long-term enough investor is only buying the pullbacks. Me, I still got to do some construction on my farm to get ready before all this stuff happens. I got to get beer for the cows now. Apparently that's a thing everybody's doing, and I got to post it on Facebook and hit like and all that stuff, right? So smart money is just going to buy the next dip. But they also waited out this whole thing. They didn't run in. And they're getting their cash out now. So how do you do that? Now we're getting to the point. I always beat around the bush for like an hour, right? It's like this and that. And people are like, all right, just tell me what to do, bro. All right. Here's what you should do. Figure it out. You should figure it out. That's a you problem. That's half a joke, but that's honestly the truth. Nobody can tell you what to do. Like nobody lives your life, right? Nobody understands your needs, your goals, your wants, your like where you want life to go. You got to decide. Like for me right now, I'm like, hey, if there's profits in the markets, I'm happy to take some because I want to live a good life. Maybe I want to get married. Maybe I want to buy a ring for somebody. Who knows? Maybe she doesn't know. Maybe she knows. Who knows? I don't know. Who knows? Like it could be one way or the other, right? And that's my metric. Maybe you're not going to spend too much money on a thing that is like just a round thing, right? Maybe you're like, I don't need that money right now, right? So you decide what you want to do, what your timelines are. Can you wait out the 2 years and what your plan is? So I'm going to give you a gift at the end of this that's going to help you do all of that. But here's been my plan, right? My plan is like, buy something good. By that, you have to do a full analysis, which I'm going to show you how to do. You do a full analysis to figure out, is this garbage or not? Because 90% of crypto is garbage. Like 60% is complete garbage, 30% is, it's like shit with like a cake around it. But if you just scoop a little bit off, you'll see the shit underneath, right? 10% is the base layer technology that is going to build the future of the world. So you figure out, how to pick the right stuff. Then I buy it when a lot of these metrics line up. I buy a bit, I let it go up. Then when it pulls back, I see which things move, and I buy a little bit more. So that doesn't mean I get in, this is Ethereum. That doesn't mean I get Ethereum for $1,000. Never. It means I get Ethereum for like $2,000 and ride it up to $4,000. I don't sell at $4,000. Then it pulls back, comes back to $3,000, and all my metrics get met. And I ride the 2,000 to 3,000 wave, and now I made a time and a half money, right? You just keep doing that at a consistent basis, and you make money. So there's 3 strategies that we're going to look at, right? The first metric of success for me is just getting my money back, right? Because what ends up happening is we put money into the markets, and the mindset is number go up, I'm rich. Okay, here's a different frame of thinking. I took $100,000 and I put it into this coin. It says $200,000. How much money do I have in my bank? Minus $100,000. So as far as I can think, I have lost $100,000. The number can say whatever it wants. It'll bounce around, but I have lost $100,000. So my goal is to go from negative $100,000 to just zero. Right? That'll put your feet on the ground. That'll remind you you're not rich. Right? Like, but at that point, that's what you should be thinking. I literally got a call from, the testimonial that was posted. A friend called and he's like, man, Sim, this is insane. I just made 4 to 5 times the money I've ever had in my entire life. And I was like, fantastic. How does it feel? He's like, I just, I can't even, I don't know, can never imagined. And I was like, great. Are you sitting down? He's like, yeah. I'm like, now imagine this. You're minus all of the money that you put in. You haven't made anything yet. And he's like, all right. I'm like, great. So you're broke. So like, let me know when you get back to just not being broke. Right? And that like leveled him off. And he's like, great. Okay, now you're right. Now I was like, now figure out how to not be broke. Right? Now it's not 4 to 5 times as much money as I made. It's I've lost all of my money and I got to make sure I get my money back. Right? So in that metric of success, the first strategy is just get your capital back strategy, right? You decide, hey, when I double it, I'm going to take out my initial capital. Or when I triple it, I'm going to take out my initial capital. Maybe you're somebody who knows the game, and you're like, look, this asset's going to 5x. Why 5x? I want my initial capital back. Or like this happens, where just things just pump out of the blue. We literally had one of the people, and she invested a decent chunk of money by anybody's standard into a coin. And it was an AI coin that we picked earlier. And it just one day she wakes up and looks at the thing and she's just like, this is like, how is this thing right? This doesn't make sense. And I'm like, yeah, what do you want to do with it? And she's like, take it. I want to take it. And she just went in and sold like 2/3 of whatever was in there and just took out, and she couldn't believe that this is how it works. Now that thing went double from where she had gotten out. Did she care? No. She just stopped looking at it. She's like, I look at how much money I just made. I don't care if it doubles. And then there was still a third left in there. So when it doubled, she made 66% of the stuff. And then now in this process, the system just went, everything's turned. Now you got tons of money plus another 66% of your initial investment, right? And that's profit. So get your capital back, set your metric. And if you're like, yeah, but I still don't know how to do that, wait until the end of this talk. I want to solve all of your problems. Okay? And this is what I've been doing with people. Right? This is how I've been teaching them the game. Okay, that's the first strategy, right? I put in money. There's a point where I control my greed, because when it happens, it's the weirdest thing. Like, you think like, yeah, I'm just going to put $500,000 into this. And when it goes to $1 million, I'm going to sell it. And then one day you wake up and it's like, it's numbers that don't make sense. And you think it's like somebody added zeros to it. And then this like demon wakes up on your shoulder and just goes, we're so rich. If this is how it works, we're genius. Let's just make more money. Let's just get rich, right? And then people, when they come to me, I'm like, dude, do you see that number? Like, remember what you put in and do you see that number? And they're like, yeah, but I take it out now, I won't make more, right? So in that moment, you have to have it all set up in a way so that you know, hey, I hit my metric, I'm gonna control my greed, I'm just gonna get my initial capital back so I can't be broke, so I can win the game. That's one strategy. A way to achieve that strategy, because getting there is a very tumultuous period. So you need to like just emotionlessly set up things, right? So here's a framework of thought. Don't just do this. If you do this, you're gonna lose all of your money, and you're gonna lose grandma's money and everybody's money. Okay? Don't just do this. This is a framework of thought. You have to adjust it according to your things. Like, if I buy something and I have the understanding that it's gonna 5x, like Ripple, right? 60 cents today. It was at $3.80 in 2017. It's one of the oldest coins ever. Do I think it's gonna do a 5x? Well, that puts it at $3. Okay, then there's very high likelihood that it does a 5x. Great. So if I buy it for 60 cents, what I do is I say, when it multiplies 1x, I take out 20% of my initial capital, right? I put in $100,000. When it goes to when the number on the screen says $200,000, I take out $20,000, right? I got $180,000 still in there. When it says $300,000, I take out another 20% of my initial capital, right? So I got 20,000 and I got 40,000 out now. And the thing says $280,000. When it goes to $400,000, I take out another 20%. So by the time it says $500,000, I have my $100,000 that I put in on the side, plus I have $480,000 in the markets. Win-win situation. What ends up happening in that situation is you have 71% of your initial assets still in the market. You got an 80% compounding on it, and you got your cash back, right? What's probably going to happen is you're going to put in $100,000 and it's going to go million something. Who knows what, like, these numbers just get bananas. And then all of this is going to get thrown out the window, and you're just going to be like, honey, we're rich. Let's start PJing places, and like, let's start spending money like and it's like, no, you didn't do anything. Take your money out. Okay. So it's called it's a laddering out strategy. I mean, did you bring this? You're such a sweet guy. How did you know I was going to talk too much? Right? So it's a laddering out strategy. So it's like, okay, I got a metric set of getting my money back. That's when I don't lose this infinite game, right? And then I have a laddering out strategy to say when it goes up 100, I take out. Now, if you're sitting on Bitcoin and you bought it at 30, and you go with this strategy, you're expecting it to go to what, 150K? That's pushing it. Like, now you're being greedy. If you're thinking that, oh, when it 5x's, I'll get my initial capital back. It's unlikely that it does it this time, I'll be honest. Because everybody thinks it's going to go past 100K. That's exactly the reason why it's not going to go past 100K, as far as I'm concerned, right? So then Bitcoin, I would tighten that stop. And it's like, okay, maybe it goes up 50% and I take out 20%. Maybe it goes up 30%, whatever your number that works for you. It's a laddering out strategy. Now, realistically, from here, Ethereum's probably going to do a 10x. Like, at least from the pullback, it'll easily do a 10x because it's following along what Bitcoin did. So if it goes back to 2,000 on this pullback, it going to 20,000 is not out of the question, right? Because the way this market moves and the amount of money they're going to print and the craziness that's coming is going to blow people's minds, and it's going to melt faces. Now, if you just go buy these things without having your own plan, you're going to lose all your money. Statistically speaking, 90% of people will lose all their money. Okay, does that make sense? Right? It goes up this much, I take out this much. It goes up this much, I take out this much, right? Then comes the... Okay, so then the question that you asked, Rebecca, was like, okay, well, I got this cash on the side, and now I got an itchy trigger finger, and what do I do with it, right? First of all, sit. Don't do anything, right? Don't feel like you always have to do stuff with your cash. The whole point of the cash is opportunity will come into your door. Don't feel like you have to rush in, especially if you just made the cash. And then the next question is always, well, what do I do? Like, I don't want to take it out. I don't want to put it in the bank account. I don't want to put it in other places. I want to reinvest it into crypto. How would I do it? Right? Some people, what they'll do is the asset pulls back. You sold it at 3,000. It pulls back to 2,000. You buy a time and a half amount of the thing that you had faith in the first place. That's a good way of doing it. That's a safe way of doing it. I'm a slightly riskier guy. So I go, look, I made a bunch of profits. We're so early in this cycle, sit on the sidelines, things dump. I'm going to go buy a bunch of risky stuff with it because this is house money now. This is house money, right? And this time around, I'll be honest, things with hats are making billions of dollars, right? Last time I was like, no, meme coins, fundamentally illogical. And I just was like, nope, it's going to be a monk. I'm going to sit on the sidelines, let this narrative play out. If it lasts until the next bear market, then I'll participate. This time around, I'm looking at it, I'm like, you know what? People are just dumb. Like, it's the honest truth that like most of us are idiots. And something with a hat on it makes so much more sense to us than like digital gold stored somewhere. Like, that's a complicated narrative. A dog with a hat, that looks like my dog. Bye. Dogecoin, like, you know how many people I've spoken to and I'm like, Bitcoin, they're like, like Ethereum, they're like, no. Dogecoin? I'm like, okay, you know what? This time around, I'm gonna take those profits and I'm gonna go buy things with hats on. Pardon? Great question.
Yeah. Well,
I listened to I literally, you know, it's hilarious how there's paywalls, and on the other side of paywalls are ultra wealthy people having ultra wealthy conversations. It just costs money to be on the other side, and we're not willing to invest the money to get to the other side, right? Like this $80,000 wall that gives you this chart that I'm not even supposed to show you. I don't care, right? And to answer your question, there are on the Real Vision Discord, there's literally a degen chat, and they have not failed because, you know, it's who pumps it. It's not that retail that pumps it. It's them that pump it, and then they hand it to the retail, right? I almost want to say name something, but I'm not going to name it because a lot of people are going to run in and lose all their money. But there's literally, you can find the places where you can hear what the hedge fund managers and the big money is talking about and which things they specifically say. And if that thing pops up 6 times, now everybody's listening, and everybody with money pumps it, right? And you will hear that 6 months to a year ahead of time before you hear it on social media. By the time you hear it on social media, sell it.
So how do they know that? What makes them get together? What makes them?
It's literally like, you know, they're just as degen as the rest of us, actually. They're more degen. Like, have you know, Wolf of Wall Street, throwing midgets and stuff? We don't like throwing midgets. We're good people.
Yeah.
You know what I mean? They're psychos. So they're happy to take insane amounts of risk, but with like a small amount of their portfolio, right? So to them, it's like okay, I'm gonna be safe with my fund and da 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 da. But then there's that like little demon inside that's like, yo, what crazy thing did you gamble on? And then they talk to each other like, yo, I'm gambling on this. I'm doing this and that. I want to say so many names. I'm not going to say them. But, you know, pardon?
Say one.
Yeah, exactly. Like this is,
Say one. Say one. Yeah.
no,
Come on.
no. Not when this thing's on, because there's a bunch of people listening who I know are going to just hurt themselves. I'll say it when this thing's off. How about that? And the rest of you guys, next time, show up in the room. Maybe you'll get some names. Just telling you, right? And a t-shirt, right? Yeah, I'll tell you the ones that I'm gonna buy. And you know, yeah, anyways, what were we talking about? Take the capital, take the profits, right? One strategy is we take the profits and we move it down the risk curve. Because now you've made that money and you have some conviction that there's still the rest of this game to play. So therefore, I don't need that initial capital back today.
You don't want to buy dogs with hats on.
I love your accent, by the way.
Thanks.
You know, anything you say is gonna be, if you don't want to buy.
All right, mate. Do you want to take a photo on your scooter?
If you're taking profits and you want to de-risk, so not buy dogs with hats on and put it to a safer asset, in this kind of market, where would you look?
Great question. So, I mean, for me, safety means different things, right? Like, I look at, I'm so deep, you know, crypto is so deep down the risk curve that my other side of the safety is a farm and ducks and chickens and cows. You know what I mean? So I have my own farm, I have water, I have ducks, chickens, cows, turkeys, just goats. We just bought goat.
Can I ask a question in a different way then?
Sure. In crypto?
No, not in crypto.
Okay.
To ask the question in a different way, if I don't want to tie myself down physically to one spot, I want to keep my nomad lifestyle.
Right.
But I want to balance my risk with crypto by going into something that perhaps behaves in an inverse way to crypto.
At this point, nothing behaves like everything is just simply like you watch the Everything Code, right, by Raoul Pal.
Okay.
It's an explanation of like there's no assets left now that are inverse, right? People used to buy gold as a safety mechanism.
Yeah.
Like gold, especially for a nomad, gold doesn't even make sense to me. It's like I'm not going to lug around bars of gold and prove to you why.
Only it was a bar,
right?
Yeah.
So it's like okay, so maybe I buy Pax G, which is tokenized gold. But I can't justify buying anything other than crypto. So then it's like I bring it down the risk curve and buy Bitcoin with it, right? And a lot of times it's actually cash, right? USDC, USDC ERC20 on the Ethereum network was the best asset for you to hold from the crash of the top of Bitcoin to whenever you wanted to buy it, right? It crashed other currencies. IDR was really stable. Indonesian rupiah was really stable. It actually went up in value a lot. But the US dollar is here to kill all other currencies. So as much as we hate fiat, there are periods where you want to hold the US dollar. So my personal thing is turn it into USDC, put it into a safe storage device, take 23 of the words and write them in different places and keep them. Take one of the words and memorize them. Now you got all your money stored inside of your head with one word, and now you can't be touched. And you have unlimited agility and fluidity and all this kind of stuff, right? As far as crypto, bringing it back down the risk curve, it's like, yeah, Bitcoin would be the safest, but Bitcoin has its own volatility. Pax G would be like my equivalent, but gold is doing weird things nowadays. Like I don't trust gold and silver to behave the way they used to behave, right? My bigger thing is like it goes into, I got the asset. The single best asset to invest into, you. Highest ROI I've ever had on anything is investing into myself.
Yeah.
My skills, my knowledge, my business, my earning capacity, my brand, my things that nobody can ever take from me, and they pay off infinitely. Your family, your relationships, your health, right? Eat quality food, like live a quality life, sip quality coconuts on quality beaches, right? Like that's kind of the whole point of this whole thing. Otherwise, it's all kind of worthless, right? So figure out how much of that goes into you. And then if you're like, no, but this is like, 10% is going into lifestyle, 90% goes back into assets. Here's how I would split it, right? Every cycle, the goal is, I always don't do it like this because I'm crazy, but the goal is 10% of the profits go into lifestyle, 35% of the profits. So 10% of the profits go into lifestyle, 10% given away in some capacity. Another 30 to 35% gets reinvested into my business and my earning capacity and myself in some capacity, right? Might be education, might be business, might be teams, might be, I don't know, hiring people to develop AIs, whatever that is. And then 50% sits there, waiting for the next cycle. 50% just USDC, sit on the sidelines. And that's on top of having a cash cushion on the side that I don't invest into the market. So I have maybe a year to 2 years of runway that, emergence. And then there's a 15% contingency emergency little bucket on the side, right? I don't do it perfectly, but that's the way to spread it out. Think about how much goes into your earning capacity, how much goes into your lifestyle, so you don't expand your lifestyle too much. And then the rest of it, just sit on it. Just sit on it, right?
And following up on that, if they're going to print another $8 trillion, and if I'm sitting in USDC, am I not devaluating?
Right. This is a great question, man. I'm glad you're at the front of the class. Class. Just like it's just a room. It's the only class you've ever sat in the front of, actually, because you love it. This is the class of money, right? This is a really good question. The question was, if they're printing money, why would I hold the dollar, right? See, when they print money, the value of assets and the purchasing power of the dollar doesn't drop right away. The purchasing power of the dollar drops when inflation goes up. Inflation goes up a year to 2 years after they print the money. And the people who are the closest to the money are the ones who get to buy things with it first. And then by the time inflation hits, assets inflate. And hopefully those guys buy assets, which means You know, you get a bunch of printed money, and you got money, and then you just time it right, and then as soon as they start printing money, you take that money and put it into the assets. That's what we're doing. Then the assets inflate, you ride that wave up, dollar drops in value. Then you get out of the assets and go back into dollar, because now inflation's higher, right? Assets are worth more compared to dollars. But then guess what they do? They try to control inflation. They stop printing money. The dollar becomes more valuable. It kills all the other currencies, right? So there are times to be in the dollar. And simple, when the Dixie is low, buy the Dixie, right? The dollar index, buy the dollar. When the Dixie is high, sell the dollar and go into assets, right? Something like that. This is a great point. So now, okay, rule number 1, just please get your money back. Rule number 2, have a metric for when it's up this much, I take out this much. So you can emotionlessly do it. If you feel like deploying it down the risk curve, do it. There's going to come a time when I'm going to start ringing the bell. It's at this time, I'm not even going to need to ring the bell. The world is going to ring the bell. And you're going to be like, yo, I'm done taking risk in the assets. I got to figure out my life because this thing is just getting crazy, right? And you're going to build a home. You're going to structure yourself and all this stuff, which we're going to go through in a second. But even alongside that, right? That's your, like, it goes up this much, I take out this much. Goes up this much, I take out this much. Then there's the third strategy, which is your floor strategy, right? That's the trend-based stop loss strategy. That tends to work well for people, which is just saying that when the trend is forming, right? This is Ethereum. This is what just happened. That's why I wanted to do this talk, right? This is the trend-based stop loss strategy, which means it's an automated order that says sell everything when it gets to this price. I'm sleeping and it gets to this price, sell everything, right? That, first of all, you got to have the mindset, you got to sell everything at some point. This whole idea of hodl, 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 and then what, die? Like, with like numbers on the screen, you know? So basically, when you buy something, the only way you can lose money is two things. You can either buy garbage, which is like, at that point, you're going to lose all your money. There's no saving you from there. But if you buy good stuff, the only way you can lose money is by selling it lower than where you bought it. Like, that's mathematically the only person who has the keys to do it is you. So now the only person who can lose all your money is you by selling it lower than where you bought it, getting emotionally manipulated, whatever, right? So then what you do is you buy at a decent enough price, right? When a lot of these things have turned, when these metrics are there, you buy. Right? Let's imagine you buy Ethereum. Let's say you're like a hyper genius, like the smartest person in the world, and you buy Ethereum at right here, you buy it at $1,000, right? You got Ethereum at $1,000. Then just don't sell it lower than where you bought it and wait. Ethereum goes up, starts to make a trend upwards, you watch, do nothing. Comes back down, you do nothing. Bounces around, you do nothing. Because in this period, it hasn't clearly left, the train hasn't clearly left the station yet. If you go in and set this order saying, hey, sell everything when it hits this point, this is going to happen. Exactly what happened here, which is like you buy it here and you set the order and it comes back, knocks you out, confirms back again, just a little bit below where you bought it to make sure you're out of the trade, and then the train leaves without you, right? The point is you buy stuff at a good enough price and then you wait. But let's say you're not like some genius, right? Let's say you're like me, you're half an idiot, but you like come across as like not retarded, and we're allowed to say that word because we're in Bali. Let's say you buy it right here, because you're like, yes, I'm getting excited, I think things are gonna go, and then it crashes, like it always does. That's more realistically what's gonna happen, right? So what you do is you go, I'm not gonna sell it lower than where I bought it. I know I'm holding gold, silver in this case. Then what you do is you go to vacation. And you just look at it, you set an automated alert saying, let me know once it comes back above my target, otherwise I'm not worrying about it. Target hits, alert hits, goes back down, let me know when it comes back again. Bounces around, let me know when it goes above, you start to pay attention. It's like, now we're in profit. Now I bought it here, now I'm here. Now is the good time, let's start to watch it. Still don't do anything. Let it bounce around and do this. And then when you see the train leave like this, which is like, it becomes clear when the train leaves, right? Because everybody starts telling you about how they want to buy Ethereum now, and you're like, okay, so that means there's something happening here. Then you follow the trend up. And this is what I mean by nobody's going to do it perfect. You're always going to fuck it up. There's no perfect way to draw the trend. There's no perfect way to move this thing. a few things that I've seen work is like, you ideally want to leave as much of a gap as possible first, right? Ideally, don't try to like follow it tightly with the price, because what it does is it comes back and it hits your level and then it leaves, right? Let it breathe. Now, in trading, they say, let your runners run, right? Because your runners are going to make you all the money. You don't have that many of them in a year, usually. So you bought it here, bounces around, do nothing. What I do is I set the line on trading view, so I know exactly where it is, so I can watch it, but nothing in the actual orders themselves. Then when the train leaves properly, when it goes up and makes this wave, you're not going to know that that's a wave. When it pulls back, you're not going to know that that's the bottom. When it makes this one, when it moves well past the previous top, let me do it here. When it moves well past the previous top, like this, then I start to get more convinced that that was some kind of bottom. I still do nothing, right? Then it pulls back again. See, like maybe I set it here and maybe it comes back and hits and I get knocked out and I miss this final run. Still do nothing. But then when it goes off on this kind of run and all the mania returns and everything comes back, then it's like, okay, by the time it even gets up here, I'm happy to put in the stop loss order here, let's say. Like right where I entered. Once it's well above where I entered, I say, now if this trend, which is clearly forming, turns around and hits where I entered, give me my money back. Because I don't want to lose my money. I can enter again, right? Does that make sense? Like when the trend starts to clarify, and this is where there's no perfect like version of this. When the trend starts to clarify and things are moving away and there's enough momentum, then put in a trend-based stop loss right above your entry point, right? To say, just give me my money plus some fees back that's going to cost me to run this. Then when this happens and it shoots up to the moon like this, and we're like, okay, something crazy is happening, then I would move it right here, right? By the time it goes way up here, I move it right here. So now it's saying, and along the way, what you've been doing is it goes up, you take out a little bit. It goes up, you take out a little bit. It goes up, you take. So that's going on the side anyway, right? These are synergistic strategies. And at some point, you see the trend go proper, and then you move it to a place where like now, if it turns around, it comes back below this, the trend is completely shifted, right? Because the whole point of a trend is saying it's trending upwards, and I'll know when the trend turns downwards when it clearly makes a pattern downwards. Now, the trend just shot off to the moon, and then it pulled back. And this wick was this candle was actually a big signal. When that much momentum gets released and that much profit gets taken, then it goes back up again. That to me looks like a top. And then I actually moved it right here. Then I moved where that red line is. That's where I moved the order. Then I actually set the order because I was like, man, we got in at like 2. This thing's at 4. The money's doubled. And if it pulls back beyond 3, I'm happy to get out. Now, what it's probably going to do is this. Come back, hit the order. It's going to go back up. It's going to bounce around here for a bit, right? Doesn't matter. I took a bunch of profits on the way up. It goes up. Never going to be able to sell it at 4,000. Somebody else is going to do that, right? I'm just going to let it bounce around, hang out. But I'm actually watching this happen, though, isn't it?
Yeah, so I can ask, where in the
Elliott
wave is that?
Pardon?
Where in the Elliott wave is that bit that you're pointing at now?
We're in the Elliott wave.
No.
Oh, in the Wall Street cheat sheet. I think we just went through this. Because that's what it looks like to me, right? Went up, had this big pullback, then it goes up and peaks, comes back and does this. And now it's going to go, it knocks me out right here, right? Right there. And it bounces around. Everybody stays complacent. No, we're going to go to the moon. No, we're going to go to the moon. Well, at the same time, I'm like, yo, where's the water? Where's the fuel in the rocket ships? How come Bezos is running, right? While everybody's holding on. And smart money needs this time to offload. That's the thing. When you have a $1 trillion asset like Bitcoin, you can't just offload, right? And yeah, they do it OTC, but OTC still moves markets, and there's arbitrage between the two. So then this narrative, and at the same time, CNN is telling grandma to get in, and I got my barber asking me if he can buy doggy coin, and I got like servers telling me, hey, I'm gonna buy this, I'm gonna buy that, and I'm just like, oh shit, I'm out, right? Now, that's what seems like it's playing out. But as far as I'm concerned, it doesn't matter to me, right? My plan was just that. It's like, just follow it up. At some point, the thing hits, and then I'm out, period. Now I went from $2,000 to $3,000. That video that I was trying to show you from the psychologist, she says this. She's like, look, in this environment, nobody's making money. right? Her highest value clients are talking about that, like nobody's making money. So the guy's like, what do you recommend to people like that? And she's like, all I say is like, look, focus on making the dollars. Quit focusing on the millions. Make $1 today, make $1 tomorrow, make $1. And it's like, make $1, you just put money in and freaking time and a half it like that. Depending on how much money and how many times you can repeat that process, you're going to make a lot of money, right? And I've just been here for too long. Like now it's just become so obvious. 2013, this was all new. And we're like, oh my God, this is happening. Cyprus bail-ins, why did that happen the way that it happened? Then, I watched everybody run into this mania and they were convinced that we're going to get saved from the banks by this thing called Bitcoin. And the moment the banks did the big bail-in, exactly what we were expecting, it crashes. Was from $200 to like $50, $60. And then we're all like, oh, this thing's done. It's over. Same mania, cools down. Now everybody's going to get scared of it, I bet, right? And then on the other side is going to be just a bananas run that everybody's going to miss, right? Okay, so that's the trend-based stop-loss strategy. That's setting a floor on things. Now, how this actually works is that you have to put your crypto on the exchange, right? And one mistake I've seen people make is they have it held off, and then they're like, oh, I'll do this when it gets busy. When it gets busy, your crypto ain't moving, right? Ethereum fees go to $100, but also the crypto exchanges go down, and there's all this stuff, right? And this does not work all the time. Just because you have an order set does not mean it fills. Because when the market does this, it just doesn't have time to fill, right? You're gonna go to sleep knowing like, oh yeah, I'm good. You're gonna wake up one day and there's just gonna be a God candle that like just breaks through and they never sold. So that's where still you have to manually kind of watch it. That's why I actually went in and manually sold it because the orders didn't trigger, right? So I had to like do some stuff on it. Whew. All right. Now you have actually made money. Like this is the only time you've actually made some money. And my thing is like, it's not even, you haven't even made the money until then. Pull the money out. Do something with it, right? Not blow it, not, blow up your lifestyle, but use it to improve your life. And now you're actually benefiting from the process of making money or improve your, whatever, improve the world, do whatever you like. So now, last time, this process took us up to 58K and we got out of 58K. This time it took us to 63K. So I'm putting that out there. Let's see how well this works. Let's see if this is a process that's actually vetted and triable. We'll see in like 6 months. I put a lot of money into XRP now at 60 cents. Let's see a year down the road if that's the smartest decision or I'm still the idiot. Okay, so now you hit, the moment you hit that sell button, the moment that order triggers, you have caused something called a taxable event. Stay with me here. Breathe, 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 relax, relax, relax. It's going to be okay. It's going to be okay. All right? It's called a taxable event. So what's a taxable event? A taxable event is, so buying crypto is not taxed. Moving crypto from wallet address to wallet address is not taxed. To an exchange is not taxed. Converting your crypto from one crypto to another crypto is a taxable event. Most people don't know that. I will repeat. Converting your crypto from one crypto to another crypto is a taxable event. Depends on your jurisdiction, but I haven't found a jurisdiction where that's not the case. In the vast majority of jurisdictions, that conversion counts the dollar denominated or the currency denominated value of the purchase against the currency denominated value of the sale and takes the gain that you had and charges you a capital gains on that, right? Capital gains tax. It might be 30%, might be 40%, whatever. Then the new purchase of the asset, whichever coin you buy, is calculated at the currency denominated value of that, and then whatever you make is going to get calculated from there. You converting from your asset to stable coins is a taxable event. You converting from stable coin to cash is also a taxable event. Stupid, right? And it's like you going from crypto to fiat is a taxable event, right? So now it's like, Okay, so taxable event. Most people think about it in the negative way, right? I made a bunch of money, now I got to pay 40% to the government for no reason. Yeah, it's not fun. Nobody likes that. But also the opposite applies. The wealthy love taxes. You know why? Because they do the opposite. They go like, I bought something for $100,000. It's down 80% because I'm in a bear market. I sell it and rebuy it and cause a taxable event, which means I write off an 80% loss on my taxes on that asset, right? So I just saved $80,000 on taxes for this year. That's called tax loss harvesting. It's a technique, right? The way you can automate this process in a pretty big way is softwares like Coinly, Crypto Tracker. There's a bunch of like tax softwares. Depending on which country you're in, look up the best tax software. I'm making an AI that's going to show you how to do all this stuff, right? That's going to be fun. But basically, there's a software that you can enter your stuff and you hit the button and it shows you, hey, you can reduce your taxes on all this stuff, right? But that is not what I like to do.
So if it's say, first of December and buying the 1st of January.
No, like selling 31st of December and buying it right away, because otherwise it'll fluctuate and you'll make a loss or whatever, right? It's like I bought something, whatever, 1st of January for $60,000 Bitcoin, right? December 31st, it's at $30,000 Bitcoin. I'm at a 50% loss.
Yeah.
So what I do is I sell it and rebuy it. So now my sale is at a 50% loss, which means for that year. And the purchase amount starts from that same amount. So for this year, I get to say, I made a bunch of money in my business. So then write off the amount that I lost against the money that I made, so I pay less taxes, right? That's tax loss harvesting. It's a loophole that still exists. By about 2025, it's going to be closed. In certain jurisdictions, it's already closed. So you got to make sure that it's in your country, it still works. But look up tax loss harvesting in your specific country and jurisdiction. So that's the next piece. It's not just about hitting the button. Crypto is everywhere and nowhere at the same time, right? It's not from a country. Which country is Bitcoin from? All the countries and none of them, right? So what matters is when you hit that button, where is your jurisdictional tax residency? Where are you a tax resident? Which government are you beholden to? And the crypto world has been, it's been the Wild Wild West, and our people have done great, and we've just operated like, yeah, we're just cowboys. Yeah, that's done now. That's done now. You got like another, until November of 2025, feel free to play the game. But you see what's going to happen? We're going to make a ton of money by 2025. And you know what's going to happen? There's a banking system called the ISO 20022 banking system. The launch completes November of 2025. And the way that banking system is set up is after that, there is no way that you can convert from your crypto into money and turn it into lifestyle without it flowing through this automated messaging standard. And the entire world's banking system is about to be closed off according to this. And I know this because I'm literally working with the government to make this happen, because this is one of the things that I involve myself in. I also hang out with these regulators, and I literally ask the SEC, FATF, Monetary Authority of Singapore, when are you planning on just, and they're like, end of 2025, you guys are done, right? And all the times line up. In that system, you can't bring in illegitimate wealth, which is like because in that system, you simply have to report source of wealth. And that system, if you can't prove source of wealth, not only do you not get to convert the money, your digital ID and your social credit score get docked and blocked. Yeah. Yeah, please. Yeah, ask it on this.
So is this a system that functions under this sort of Western institutions? Because
Yep.
Swift is it's a function of Western institutions, and there are other systems that may not adhere to the same kind of regulations.
This one's Brett.
Okay.
Like Bricks is already hooked up to it. Swift is hooked up to it. Ripple Systems hooked up to it. Middle East is hooked up to it. Indonesia is actually the only country that was on the observing list. What you want to look up is the FATF regulatory recommendations.
Okay.
Right? That's going to tell you the jurisdictions this works in. There's other jurisdictions that won't work in. Algeria won't work.
Yeah.
Lebanon won't work. but I'm sure you don't want to move your money through Algeria and Lebanon, right? So it's like they're blocking out certain countries that are not going to participate with this.
Okay.
And it's a standard of messaging that will be required to be compliant with in order for the money to flow within the financial systems,
Yeah. Okay.
right? And CBDCs and all that.
So is it for certain, like, for example, a country like Russia and the US will be functioning again under the same financial system?
So
Given the
let me-
geopolitical
Let
environment.
me explain how that works. This is really good question. What's your name? Joseph. Yeah, nice to meet you. So this is why XRP is my baby, right? Because I'm like, you're right. US makes a CBDC, China makes a CBDC, Russia makes a CBDC. There's no way that they talk to each other, because now I can have the financial data of each other. That's like the biggest, spying operation ever. So what's actually going to happen is already happening. Is Ripple is built to be the central bridge, neutral bridge reserve asset that sits in between these different currencies. That's why Ripple is ISO compliant. Russia and the BRICS, they're going to make the BRICS currency, and the BIS is making the whatever M-bridge currency, right? Everybody's making their own currencies. They're going to fracture into their own currencies, turn it into CBDCs. In order for them to transact globally, they will flow through the ISO system, flow to a neutral bridge reserve asset. XRP, XLM is going to be in some part of it. XDC is somehow involved in it. There's a bunch of them. And then for 3 seconds, the liquidity of XRP is used to allow it to flow to the other side. The data doesn't flow, but the authorization of the transaction is confirmed on both sides. And then the yuan goes to dollars and it gets converted forward, right? But anybody who's in the crypto space, look up Operation Choke Point 2.0, right? That is Operation Choke Point 2.0. There was also 1.0. This is a proven thing that the US has been doing to try to choke off the points where liquidity can flow in and out of this system. Man, it's called blockchain. It's not going to give us the freedom that we think it's going to give us. Like the net and the web were here to give us freedoms, but nets and webs didn't. Like some people got the freedom. People who knew how to use it got the freedom, right? The same way if you know how to use the system, and I'm going to give you a bunch of techniques. We're getting there. I'm scaring the shit out of you. Then we're going to give you solutions, right? But this is a fact that, like, we got to start thinking about how the game is being played now, not how it was played, right? So okay, taxable event, jurisdiction matters. I can't just hide my shit. I got to put my money on the table so that it's not considered money laundering, right? Anti-money laundering laws say you have to prove source of wealth and you have to bring legitimate wealth in. Great. That's also why I'm in Indonesia. I love this country. Okay. Here's the technique that works well. Indonesia, crypto is considered a commodity, not a security. It's under commodities regulations until end of 2026 sometime, right? We're working closely with the next VP to make this process happen, Gibran. Until then, is it still 0.21% tax, right? It's 0.11 on the purchase and 0.1 on the sale. So it's 0.11% tax on the total purchase amount of crypto, and 0.1% sale on the total sale amount of the crypto. Total sale amount. No capital gains tax, no BS. In order for you to be able to do that, you have to sell it in Indonesia on an Indonesian exchange and be registered for it. In order for that, your tax residency has to be here. So your tax residency has to be here, which means you have to register a company here. You have to get a quitas here. And what we have done is basically gotten authorization from the government and everybody to be able to do this with people, right? And also working with the government's helps. And then we have our own partner banks and our own partner exchanges, which facilitate all of this happening. And within that, you can take your own crypto or your own stable coins, and you can put it into your own company, into your own accounts, sell it and put it into your own bank account, and pay 0.1% tax. It's huge. I know it's a ripoff, like 0.1%. Like, who wants? No, just total, like a transaction fee of 0.1%. There's no capital gains, right? 0.1% on the sale.
On the total amount. Not
Yeah. On the total amount. Yeah. There is no capital gains reporting yet, right? but your tax residency has to be here. Now, that's where the nuance comes in, right? If you're in the US, you're screwed. I'm sorry. I'm American, you're American, you're screwed. This is not for you. Sorry. Figure it out. Everybody else, other than Americans and Eritreans. Yeah. The only two countries that are like, you can't do this with is those two. Eritreans.
People from Eritrea.
Right? So that's a bit of a joke. It's just Americans, like being American. Like for a lot of this stuff, here's the people who we will not do this with. Russians, Chinese. Now Ukrainians got caught up with Russians. I'm sorry about that. Russian, Ukrainian, Chinese, North Korea, Iran, and Americans. It's just like there's no difference between the two, right? Everybody else can do this, right? You can come to Indonesia, you can change your tax residency here, but you have to then meet your tax residency non-resident requirements in whichever country you're in, right? So if you're let's say from UK, right, and you have a primary residence in the UK, and you have your business making money from UK residents, then you have to make sure you meet the UK non-resident requirements and be compliant with those on that side. That's not our problem. On this side, as long as you're a resident of Indonesia, and what is it? The thing for resident of Indonesia literally says, consider yourself a resident of Indonesia. Like it says meet one of these requirements. I love Indonesia. Like meet one of these requirements to be a resident of Indonesia, right? Register a company. Yes, you got to do that no matter what. And then all you have to do is consider yourself a resident of Indonesia, which is like, other than the company and the Gitas, which gives you a residency, you have to meet one requirement. And if you just go, I imagine myself to be a resident, you are a resident. You don't have to live here. You don't have to spend time here. You don't have minimum stay requirements. You don't have anything. And it's a country where, yes.
Yeah, I would say that this is the easy part. Like to work with you and get the tax residency in Indonesia. The part which is most tricky is losing your tax residency in your origin. Because like I can imagine here, yeah, of course, the country wants to have a new taxpayer, right? But you have to losing properly your first tax residency. That's what we should follow about.
Right, and that's the cost. That's the costlier part, right? Costlier part is getting the right consulting and stuff on where you're leaving. Yeah, where you're leaving and.
In England, it's super easy. 80 days spent out, you're considered non-dom.
Exactly. Yeah.
That's true.
But most places it's easy. It's just like you have to cut your ties, right? What people say is like, no. I want to leave the country. I don't want to pay tax, but I want to spend a bunch of time there, more than 6 months there, right? For most places, if you don't spend 6 months in the country, you're not a tax resident. If you don't have a primary residence there, then you're not a tax resident, which means leave the country and just don't go back for 6 months. And then the rest, the businesses and stuff are easy to figure out, easy enough to figure out. Yep. Wait.
Called Nomad Capitalist. And Nomad Capitalist. Yeah, so I think he is American, and he's basically he was exactly. So he's been through this, and he's found out how to officially change his tax residency from difficult jurisdictions like the US, and how to set it up properly. And this guy, he's a suit, so he's not degen. He's doing it properly. So
he
check
gives
him
you
out.
the best information on YouTube, like teaches you about jurisdictions, teaches you about all this stuff.
Yeah.
You want to hire him, we got to make some more money
Yeah,
to
but
hire him, but he gives all this
Actually, my friends, they try to work with him, and I can say that he's overpriced.
He's super expensive.
He's super like the YouTube knowledge, that's cool, but I wouldn't work with him.
Right.
He actually
And
has
so-
like agents in different countries. So for example, if you go directly, so for example, he could work with Sim, and he would sell the same product that Sim sells for
10
10 times the price.
Yeah.
So I wouldn't work with this guy, but the knowledge is great actually.
Well, I've also had a few people try to work with him, and he just was like, how how many figures do you make?
Yeah.
And they said one figure less than what he likes, and they were like, that's not the experience that I want. Right? There's a lot of good consultants. There's like Sovereign Man is a good consultant that's not too expensive for global structuring. For Australia, like I'm partnered with Wealth Safe. They're half decent. For what was the other one? Yeah, make sure you pick the right consultants too. Like there's a lot of people that are gonna, not really do the full service thing. But then you have to think about, okay, first of all, am I gonna change my life? Am I gonna come live in a place like Bali? I'm sorry, you might have to come live in Bali. Like you might have to leave from whatever beautiful place like New York that you might be living in, and our rats are smaller and stuff. Like it's a different life. But you got to choose where you want to live life, right? You want to live in Bali? Come talk to us, right? We're now doing this with people from Dubai. People from Dubai are coming here, right? We're going to be holding a meeting, which, by the way, you guys should join. But so then I thought about this, right? I was like, okay, well then, where can I go? And people were like, go to Panama, go to Cayman Island, go to British Virgin Islands, go to Dubai, go to all these places, right? And then I looked into the details, and it was like Cayman, $150,000, and then maintenance costs $40,000 a year, just on lawyers and accountants and stuff. And then Dubai, it was like, yeah, I could do it for like $4,000 or $5,000, and then $12,000 for $12,000 for compliance and all this kind of stuff. It was good until they just introduced a 9% corporate tax on a bunch of stuff like this, and they're getting more stringent. The banking is getting more stringent. Cyprus was pretty decent, but Cyprus is starting to, and so I don't like Cyprus. Like Cyprus bailed in last time. I believe a liar when they told me the first time, right? And I came here, and it's like, dude, Ray is one of the smartest consultants I have, and literally, it's like I can hire his team for $1,000 a year, just for like basic accounting and consulting and all this stuff, automated using Xero, right? That's amazing. And then you scale up from there. If you got business activities and you got to do a bunch of stuff, then it's worth doing. And then setting up the companies themselves was way cheaper. But even more importantly than that, here, to me, it's not just about the structuring. It's about the relationships. It's about the partnerships with the government. It's about having the banking partnerships. It's about making sure the exchange is our exchange. That like when they say, hey, XYZ is doing XYZ, they know who XYZ is, right? And they treat you like ZZZ, right? They know the whole system is set up in a way that you can operate, right? And it's fully compliant. It will be ISO blah 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 compliant. Indonesia is the only country that decided we'll watch, right? But we're still going to be compliant in some capacity, and it's the cheapest and simplest way that I've found for this process to happen, right? So if you want to do that, get in touch. Yes, please.
So I have
Can we pass to the
a
mic? Oh, you have
green light.
yes, that's the one.
So I have a PT here.
Right.
I have a business
Yeah.
here. But here Indonesia has all these different business licenses, right? Like
Right.
an investor Kitas isn't for all investments, I understand. Like, or is it like real estate and do you know what I mean? Is there a specific have you found the license that covers crypto, I
We
guess?
made it.
Oh yeah.
Yeah.
Okay.
That's the best part, right? Like we're getting to
Yeah,
make
'cause
the infrastructure. So like I literally, not we made it, somebody I know made it, and then they gave it to us as like an access.
Yeah.
And then we're using that to be able to structure the companies themselves.
So are you able to put that into the OSS so that it's an actual license? Like
It's a business category.
It's called a what?
It's a business category, right? It's a business
Yeah.
activity that you register
Yeah,
to
yeah.
be able
exactly.
to operate with crypto. And then you have to register the right business categories to be able to trade it like a commodity. And
Yeah.
then you have to follow a very specific process of verifying the transfers of stuff in a way that's commodity compliant, right? Because like when I tried to do this for myself, right? And I did the and I went to the lawyers and they sent it to Bob FD at the time. They were like, hey, he wants to do this with crypto, and they're like, how like, but with Rice, it's in a warehouse, and you can show that it's in a warehouse. You can show the truck picks it up, and you can show the sale. Show us all of that. So I basically built up the framework for all of that to happen because it's on the blockchain. And then I sent them the process, and I was like, look, this is how we're tracking it. This is how the KYC is happening. This is how you can see the flows move. You can just check it yourself. And they were like, okay. So that's why now we're being called in by the government to actually show them how to do this. Right now it's going to OJK, so it's going to be securities regulations, but we're still helping build it. Well, my point is, doing all of that, every time something changes, we change, and we actually are at the forefront of it, and we're building it ourselves.
Okay. I have a good contact for you.
Yeah.
In Jakarta.
Yeah, please. Yeah, and we're going to Jakarta actually, like at the end of this month sometime.
Yeah, someone you need to.
I don't know. It's still, it's government. They're still being confirmed. But come. Whoever wants to come to Jakarta. Like, we're gonna go meet the next VP, and we're gonna go meet the ministries and stuff, and they're inviting us to do all these things. We're gonna make videos, 360 VR stuff. Come. We're gonna go hang out with you. Right? But sorry.
No, to summarize everything that you just discussed was this is as good as tax jurisdiction as any.
This is the best one I've found yet. Yeah, this is the best one I've found yet, and the best one that I can operate long term, right? What are my operational costs? What level of compliance do I have to go through? What is the future outlook of how Indonesia wants to treat crypto? What is my cost of setup? How complex is it for me to manage? Can I just have a couple people helping me, right? Like, if you have Ray, that helps you a lot. Ray plus Sim, you get very far, right? Ray plus Sim and an AI, and we're like the best in the world, right? So just to recap, this is for somebody, ideally, for somebody who wants to not live in the country where they are. They can't be an American, okay? Who wants to not live in the country where they are, who doesn't necessarily have to live in Indonesia for an extended period of time. You just have to not live in one country for 6 months. You could float around between countries if you want, right? Who's willing to actually cut ties in a way that they're able to get rid of their residency, who wants to come here and set this up. And then they have to give away 10% of what they earn, otherwise I will not set this up for them. They have to be good people on a good mission, trying to do good for the world. If you're just here to make money, I'm not the person who will do it with you. Find somebody else. And they have to be just like a nice person, cool person. I just want to hang out with them. Right? Then get in touch with us. We're happy to set this up for you. And then you're able to bring your crypto, sell it, 0.1% tax, goes into your own bank account. It's a globally compliant company. You can buy assets across the world. You get the same rights as a citizen, except for the ability to vote. The company has to be set up between two people. So there's complexity around that. I'm going to do a whole different talk on that. But the point is, when you hit that sell button, think about what taxable event you're creating, and think about what jurisdiction you're in, and optimize that before you go and just sell a bunch of crypto and make profits on it, right? To remain compliant. Now, in my worldview, this is also my way of separating my assets 1 degree from me, because the world that's coming is going to be a world where my digital ID and my social credit scores are not going to be great because I hang out with you guys, right? And we talk about pokey things the wrong way, right? So in that world, we then have to operate in a way where it's like my ID and my stuff is not attached to my assets and segregate, which is how the wealthy operate across the world. And now this can go on YouTube. So congratulations, guys. This is now going to be.
We do have 2 questions on the chat.
Right. So XRP going to work like money changer on blockchain system? Yes. Yeah. It's like a money changer that sits in between countries and allows that flow to happen. Yeah. Do you think the US are done with the printing or we have another run? No, we have like the biggest money printing run ever in history, ever coming up. What about being on a working visa here? You have to have a company that's wholly owned by you, right? Because the whole point is this process puts the assets inside of your own company, and then the company has to be owned by you. If you're just on a working quitas and it's under a company that an agent set up with, the kind of the way that they do it, that's not really what this is for, because then the assets get given to somebody else, technically speaking. The company has to be owned by you, and you have to have, you would be, let's say, the director, and then somebody else would be the commissioner. Your quitas can still be a working quitas. That could be under a different company if you like, but the actual structure itself has to be under you. Ideally under your control, right?
To go with what you were talking about before, you were talking the social score thing connected to yourself. You don't want to connect to your personal. So are you just simply saying that that's why we have the business set up, because it would be business that'll go through the business, so that if they do some social scores and lock up funds over on the personal side, at least it's available.
Yeah, so it's segregation of assets, right? It's like the way that you can protect against liability and problems is you can segregate your assets from yourself, right? So you basically invest into a business, and then the business is making the money, and the business is growing the assets and doing business activities, right? This is the same thing that's used for like trust structures, for kind of the globally tax jurisdiction arbitrage way of doing it, right? But it's the world and that's not going to happen tomorrow. It's going to take until like 2026 to happen. But I'm again always the one to protect against things well before the actual bell rings, right? Yeah, and it's like so for other jurisdictions, right? Let's say you're in the States. If you sell the crypto, you pay like 30-something% capital gains, sometimes 40%, like some places 50% capital gains. But if you then put it into your company and the company sells it, the company might have 10% capital gains, right? It's the same thing, but now it's just inside of a different structure, right? And then of course there's more compliance and there's a whole bunch of complexity that needs to happen around that. Okay, so that's what's happening, right? And when I'm saying I'm selling these things, like, it's not me selling it. I don't even have anything, ever. Like, I'm just giving you an example of what hypothetically would have happened in my situation. You know what I mean? No, I literally can't put this whole thing on YouTube. But it's great, because then the people on YouTube don't get something very special, which is my gift for the day.
Chocolate cake.
With shit inside, shit covered in chocolate cake. Now, so this whole process that we just went through is is just pieces of a way of thinking of how to build your own strategy and plan. That's what I've been taking people through, and I still take people through. But I don't have the capacity to work with everybody. So what I've done in this last like few month period is I've taken my entire process and made it free. Because what was successful for the people that you're now hearing all these stories about and the testimonials from was going through this process and then filling out their own strategy sheet and having all the links and the tutorials and everything put in there, and for them to be able to write out their own plan. So what I'm doing now is I'm giving away that plan for free to people who attend these meetings, and eventually it's going to be going out to the broader world. So if you would like, and that I've been charging thousands of dollars for just to go through, and people have made a ton of money from. But for you, if you scan that QR code right there,
We're going to make the same amount of money.
that's the one. That's the one. That's the one. See, if you simply have the imagination. Wait, one sec. That was too long. Did you get it? Okay, there you go. It's like everything in life, it's momentary, it's fleeting. You got to catch it while it happens, right? You never know when things are gone. It's like the crypto markets. Okay, scan that, please and thank you. If you're exactly right, and it's gone. We're gonna put it into hedge funds and this and that. Okay, and if you're like, hey, I'm on a phone, I can't scan this thing. We already thought about you. Don't stress here. Here's the link. Okay, you can sign up there. And then you will receive, it's just being finished as we speak. Probably by tomorrow or the day after, you will receive the details. And Joanna will reach out to you and give you access to this thing. And this thing is basically an hour-and-a-half video that I've made, consolidating all my pro tips and everything that has been impactful for people. And the gift itself is the document itself, which has everything in there. You just watch this video, take this thing, go through the whole process. It'll take you through the whole journey of how to think about your goals, how to think about your risk, how to think about what you want to do, what you want to buy, how to understand what to buy, tax jurisdictions, profit-taking strategies, right? Right, exactly. Where to send the crypto to India, right? But this isn't like some holier than thou, altruistic thing. And I say that in the video. This is basically my way of giving back to the people who show up. And then if you're like, you know what, this is a really valuable process and it's worth $3,000 to me, feel free to sign up. Or don't. Because I know in Bali, when I give, it comes back in very massive. Bali especially. Like, I don't even have to leave my house. People just call me and they're like, hey, do you want like this president thing? Literally, they're like, do you want to come to Jakarta and build the entire digital framework of Indonesia? And I'm like, I guess.
Yeah.
Right? It's just the greatest thing on the planet, but it comes from a place of giving. So please use this yourself, give it to people, do whatever you want with it. It is going to be available for a few months until I'm building out the new one. And once the new one's done, then this is going to end. And then it's going to be like $30,000 to work with me. So before then, just take it. I'm just kidding about $30,000. I'll still make sure it's completely free to people. Right? Because like one of the things that bugs me in this process is like, there's so much information that's behind paywalls that you realize is the reason why there's a separation in the world. That's why people can operate the way that they operate. So another thing that I would like to gift today is a shirt. Okay? Because we have a project that's supporting farmers. No farmers, no food. Okay, it's for Farm Scent. I don't even know how to do this. Like, what should we do to like give away this shirt? Like, what was the cannon? Just like, right? Yeah, just shoot it out to people. All right. Who can wear a large? Who would actually wear a farmer T-shirt that says "No farmers, no food"? That's a large. And who would wear a medium? All right, it's in the middle. Fight for it. All right. So how about this? Let's do it. Okay. All right. Can anybody who here has written down their plan? Pardon? You're getting there. But you can't wear a large. But you got a medium. Congratulations. No, we don't. It's farmers T-shirts. Like the medium is where they start, right? Pre-shrunk medium. Okay. For writing down your plan. Come on. All right. No. Okay. The question is, give us your best reflection on what spirit means.
Something that connects everyone.
I love it. With your heart. Now you guys decide whose answer was the best. Wait, you put your hand up too, right? Okay. You. Huh? There you go. You got a large. Thank you. All right. For the medium, there's no mediums in this room, so like, we're just gonna. Who looks like? Do you wear a medium? There you go, bro. You can wear a medium. Okay. Plus, no, you're literally part of the Farm Scent project, so you actually get it. Okay. Seriously, like you're one of the people actually making it happen. So I appreciate you as always. Okay. So now, the final piece. It's already past 6, so I want to close off on things. Is don't get shaken out with what's coming. Okay. If you take profits now or don't take profits now, that's your call. But don't get shaken out with what's coming. Okay. There's going to be a lot of scary shit that's going to try to convince you to run from crypto and go back to your bank account and go back to real assets and stocks and bonds. Okay. Study something called thegreattaking.com. Okay. Thegreattaking.com. Thegreattaking.com. It's a website, a book, a documentary. Do your own research on all this stuff. But there is a massive confiscation of those assets that's coming. Do not get scared from crypto and run. Crypto is one of the only fully self-custodied assets that exists out there in the world. And by the time we get to like 2027 onwards, it's going to be one of the only assets that's actually useful in transitioning your wealth to the other side. On the way, you're going to see 1,000 different scary things that are going to make you want to run from the technology side of things. Just know that that's all built to scare you and get you to go somewhere where you will get hurt. At the same time, learn, build your own stuff, show up to these meetings. We got a lot of good stuff ahead of us. If you got cash on the side, don't spend it yet. Just wait. There's some fireworks coming. It's going to be a good opportunity. I appreciate you guys showing up. Thank you for your time and energy. And we'll see you soon.